That's what we thought. Like, if you can, if you remember, like when we met in September, this was a big question mark right here, right? We didn't know if this was like gonna keep going forward or anything like this, but subsequent look at the data and what I've been fiddling around, it looks like a one-off event, and it had to do with the Maui fires. Okay, so here are the individual income tax. This is the blue line is 2022. That was the kind of the big, our stellar year, right? The fiscal year 23 is down here, and the dotted line is the year that we're currently in, fiscal year 2024. So what you'll see is here are the difference between these two, the dotted line and the orange line is the size of, this is a constitutional refund, and then it is basically collapsed. Now, it's actually right on target with these two, which is actually, from our perspective, a slight decrease, right? Because it's not enough. So, and it's getting tighter and tighter and tighter around January and February. If we look at the corporate income tax, you can see that it's really gonna, yeah.
So what did you mean when you said it's not enough?
Oh, I mean, I would expect this to be like just slightly higher than this orange line, because, you know, I would expect the individual income tax collections to be up like 1 or 2%. So there's some more space between these two lines. And
okay,
so this is just kind of a setup for the following chart, which is some of the tax collections that would have occurred right here are in the individual income tax are moving to the corporate income tax. So in the corporate income tax, what you see is things have been, so this is 2022, right? This is 3 years ago. We started seeing in December a larger increase in corporate income tax, or estimated corporate income tax in fiscal year 2023. This was the first year that the pass-through entity law was in place. And now we're seeing it even bigger, right? So the trend where the PTE law, the pass-through entity law, is making your jobs harder. So you cannot just stare at the individual income tax collections and make assessments anymore. Like the estimated tax, you have to combine the corporate income tax, or at least think about the changes in the corporate income tax and include that in the individual income tax. I usually recommend not spending that much time on the corporate income tax prior to the PTE law, because it was our most volatile tax, and it only contributes between 4 and 5% of our general fund revenues. So it just wasn't a driving factor. Going forward, we're going to have to pay much closer attention to the estimated taxes at the corporate level, because these are large taxpayers, right? When you look at whether it's worth it for you to do the pay through the pass-through entity level, it's the people who are making lots and lots, like several $100,000 of income at least, to make it worth it to work with an accountant to change everything, right? So these are our big taxpayers, and so we really pay attention to them, because they represent a large part of the total portion of the liability.
And the advantage of this is that you're not limited on your deductions
to $10,000.
Yeah, state income tax.
Of federal.
Excuse me, federal, yes.
Yes. Any other questions about that?
Interesting.
Okay.
Are we going to be combining the two going forward then, in terms of estimating or forecasting?
No, but if you want to, like, what I would suggest you do is, if you're like using it as like tricks to monitor it, I would definitely not ignore the corporate income tax and add them together, if that was something that you're interested in.
I didn't see that you had a graph for this, but I was really interested in the decrease in the trans accommodation tax.
Yeah, and it's down 5.2%. That makes sense, right? I mean, we've had lower tourism, slightly lower tourism numbers, right? And probably slightly lower hotel rates than in previous years. So yeah, that is something that we were kind of expecting anyway.
So Seth, could I just ask you a question just for my own sake? So when we look at tables like table 5A and table 5B, where you do the line item projections, that kind of stuff. So how is this going to kick into that?
It doesn't. All of you guys are doing below the line projections, and everything that we do is below the line. We kick things back when we incorporate our the impacts of legislation.
Mhm.
So really, we look at the real GDP growth after all the net of all the like adjustments for legislation and stuff, but that's for us. You do not have to worry that much about it. Guys are providing a bottom of the line estimate, which means that it includes all of the tax law adjustments.
Okay, thanks.
And one reason we have to do that is we're responsible for providing the individual forecast for individual tax types, where you guys just do it in general fund. So we need to reverse engineer a lot of these things, and that's why we go through that routine. Okay, so just as a quick reminder, what's driving the fiscal year 2024, a couple things, is the lower base from the fiscal year 22 constitutional refund, which was $311 million. We did see lower estimated tax payments all last calendar 2023. We believe that's going to reset because of the way that higher income earners pay taxes, or particularly their capital gains. We're also looking at the economic impacts of the Maui wildfires that have weighed in on things. The pass-through entities are shifting tax payments from the individual to corporate revenues. And there is some tax law changes that really were reducing our collections by $83 million.
Can you remind us generally why is there $83 million change?
Right. So they doubled the size of the earned income tax credit and made it refundable. Right. And they also they more than doubled the food and excise tax credit. Right. So they doubled the amount, and they actually extended the range which it's applicable. And they increased the child and dependent care tax credit. So all those things like come out to around $83 million. So
current fiscal year?
For the fiscal year 2024, right? Because all these went into effect beginning January 1st, 2023. And so it's a tax year, and people are claiming their benefits in the exchanges, and the differential and the tax liability as a result from these tax law changes are happening now, right? And so that's why we're including those now. Just so you know, the EITC claimants tend to claim very early in the year, right? Because they're lower income, they're entitled to a tax refund. So they're incentivized to do that earlier. So generally with tax refunds for the food and excise tax credit and the EITC, it's a little earlier. I looked at things just before the call. We're about halfway through of the total amount of people who have claimed the EITC in 2023 for tax year 2022, about half that number have claimed it for the last tax year, 2023, right? So we're about halfway there. I think we're in good shape in line with our revenue estimates. We may be $5 or $6 million off, but like that's totally within our realm of uncertainty.
I think credits, they also tend to claim very early. The food and tax care credits, those type of taxpayers, I think, tend to file very early. Because
they have very easy tax returns, and they're incentivized to get their money back.
Yes.
How quickly are we able to, process the returns? Are we on track, or are we delayed, or?
We're with the new tax system that we implemented over the last 5 or 6 years. We are very efficient now. Like it's rare that we wait more than 2 weeks to process a return, right? Unless there's something wrong with it or it gets stuff. But for things that happen, we're very quick.
Good to know. Thanks.
Okay, so just as a reminder, this is where you guys are for from the January 8th forecast, which is 4%, 4.8% for in fiscal year 2025, and declining in fiscal year 2026, 2027, and 2028.
So Seth, can I ask a question? Because your presentation is really helpful, but you didn't say anything about April.
Yeah. Can you,
And
so
the
about
la-
said,
Can I
Carl's
finish?
making a very good point. Yeah, the last 2 was where it started.
So the last 2 Aprils, right, have been enormous. And I think last April amounted to, I mean, the
1.2
equivalent of-
billion.
Oh, and 1.4, right? You said in 2 years ago, or was it?
Right.
Oh, you're talking about, I'm not sure which, are you talking about income tax collection or total collections?
Total collection, general fund was, I think there was 1.4 billion and 1.2 billion for the previous 2 Aprils.
And so, I mean, so the question is, are we going back to normal, or are we going to see another April that's abnormally large? So, I mean, 21, 22, 23 all had big Aprils. If we end up back at 2019, or I mean, in my forecast, I think I basically assumed that we would split the difference, that we weren't going to go all the way back to sort of the pre-pandemic average for April's importance in the full fiscal year, but we also wouldn't be at the 2022, 2023 level, and that that generates still a 2 to 3% drop in the quarter.
Right.
Have any thoughts about what happened? And
yes, I mean, my current thought is there's one for sure big driver of this, which is capital gains, right?
Yeah.
And the capital gains is dependent on stock market, and is also depending on I think it's dependent on real estate, right?
Yeah.
So the stock market is up this year. Not like massive gains from that I don't expect things to happen from the 2022 year for several years to come until we like really make that up. But I don't foresee a reason to expect a large drop from for say like last year. The one caveat to that was the real estate market is still relatively cool, so you could say that it will drop a little bit compared to that.
I would say that the real estate market cooled substantially, and I don't know how much of the capital gains were real estate related, but the market with people with 3% mortgages who are not going to move even if they want to, and kind of the golden handcuffs sort of thing, that really has changed the whole market. And 2023 was very, very slow as far as sales go. So I don't know how much
that explains that. Sorry, that explains 2023. At least I think it explains a lot of the drop in 2023 estimated tax payments, and probably payments with return in April as well. But the drop hasn't continued, right? It just we've sort of gotten to a bottom and kind of gone sideways in terms of activity, and so I don't think we'll see another drop, right? And that would pull April down further because of real estate, right? On a year-over-year basis, I'm not sure there's that much difference in
Oh, didn't you say that you expected like a 2 to 3% drop in the quarter, the upcoming quarter?
If you do the kinds of calculations that I did, that's what you get
Yeah.
in the fourth fiscal quarter. In other words, if April is not nearly as big as it was in 2022 and 2023, then on a year over year basis, you get a drop. And so, you know, the forecast that comes out of my model with those assumptions is still, I want to say it's at 3.8%. I updated it with the February data, and I have a drop in the fourth fiscal quarter, but I'm still getting. Actually, I can tell you exactly what the numbers are. So in the first fiscal quarter, I've got almost 4% growth in the third fiscal quarter, almost 4% growth. In the fourth fiscal quarter, it's minus 3% year over year. But for the fiscal year as a whole, it's like 3.8%, which is within statistical spitting distance of our forecast.
Yeah.
Mhm.
It's hard for me. It's hard for me to think of scenarios where the April numbers would be much less than last year's.
You think
Right.
we're gonna 1.2 billion again? So
Yeah, because the real estate market has moved sideways, right? So that's not a draw. And the capital market, the capital gains, the stock market has gone up.
well, what I heard from Wendell and Christie is it's lower, the real estate.
Well, I was
It's
just
cooler.
looking that up while we were talking, and condo sales for 2023 versus 2022 are down 24% as far as number of units,
Yeah.
and
Oh, okay.
single family by about 10%. So and that's down even further.
But
from
that's
the year
off of
before.
that's off of a very low number, right? So if you compared the 2022 to 2023 drop, right, that drop was enormous. So
You mean
in,
that 21?
No, I mean
Yeah.
20. So if you look at 2022 to 2023, you know, we went from, say, condo sales of about 500 or 600 a month on Oahu to about 400 a month, and now we're down to 350 a month. So even though we're continuing to see some decline in condo sales, the absolute levels are not dropping nearly as much as they did in 2023. Does that make sense? And the single family is almost completely flat.
So I'm just looking at year-to-date numbers, and for
Year to fiscal
2023
date or year
versus
to calendar?
calendar year. So I'm looking at calendar year, and that's what the taxes would be based on, right? So I'm
Fiscal
seeing,
year. Oh, okay. Yeah, you're right. I'm sorry.
yeah.
Yeah.
So I'm just showing closed sales for single family homes year to date. This is Honolulu. So down 26% versus the prior year. And condos down 28%. So that's a pretty big drop. And it dropped even
Yeah, you're
more
right.
the prior year. Yeah. We're lucky prices had held in.
I think you're right. There's still some room there for decline.
Mhm.
But one of the differences is, if I remember correctly, the stock market performance for calendar 2022 was not nearly what it was in calendar 2023.
Right. But, and then, of course, anything with capital gains, people have, especially with stocks, have the ability to time it, right? So even though their value may
right.
have gone up, they may not be taking the gains. Yeah.
And my reading is the activity for the real estate market matters a lot, because there's a lot of people who pay estimated taxes that live off of that. So those are the real estate agents, the mortgage brokers. It's less the capital gains of real estate, right? I mean, it could be, But it's
Yeah.
probably more likely that these people are are commission based, and so transactions really matter to these people,
Yeah.
and less than absolute value. Whereas the capital gain, the stock market is different, right? The stock market it's all about the relative value of where it was a year ago and how much how much profit are you taking.
Councilmember Hamasu, do you have any thoughts and comments? You're involved in the real estate industry.
Oh, thanks, Chairman. Yeah, we completed our investment sales report summarizing 2023, and we identified a 18% or 19% drop in sales revenue or sales volume, and a 31% drop off in transaction counts in comparison to 2022. And that's even off of a low that occurred in 2021 and 2021. So, you know, it's corroborating information relating to what you were mentioning regarding residential markets. Yeah, commercial markets are very similar. We're highly contingent, highly reliant upon interest rates as a vehicle to borrow money to build capital. And as a result, a slowdown is anticipated, at least for the first half of this year, which should conclude fiscal year 23-24. So in all likelihood will probably be, you know, I don't know if it's a 4% or maybe lower in terms of the estimate for revenues going forward from a real estate perspective, but it'll be a lot lower for capital gains and returns on real estate for at least for the next 6 months or so.
Thank you, Councilmember Hamasu. Any thoughts, Councilmember Hayashi? What's your thoughts and comments?
No, I'd agree with so far the sentiment. Yeah, you know, I think we are seeing the weakening of the housing market and also commercial real estate. I mean, I reached out to Mike. We're looking at potentially another location, and you know, their properties are there, but there doesn't seem to be a ton of them, and they don't seem to be flying off the shelf. So you know, I think there is a weakening there. From what I heard too, and talking with Mike, is, you know, if you're looking for commercial office space, it seems like you know, people are giving it away. They're willing to give it to you for just basically CAM for a short period of time, because the market there's just such a glut of commercial office space. So when that'll turn around, probably not any time in the near future. So yeah, I think the sentiment that's been expressed is I'd agree with it. I think that there's a weakening there.
Thank you, Councilmember Hayashi. Councilmember Lee, any thoughts, comments?
You know, I feel like we've all anticipated this. We knew the high interest rates were here. We knew there was going to be a drop. People are waiting. I think what we didn't anticipate was the stock market doing as well as it did. And so from the standpoint of 4% or 3.8%, I feel like, you know, we got a good handle. Our estimate has over time proven to come either under or close. So I'm pretty good that we're in the ballpark. What the exact percentage is, I don't know. Everybody, you know, your guess is as good as mine, but I feel like there's a lot of positive things going on. The construction is strong. The real property that we're involved with, eventually it does sell. You know, we have data death values that are maybe 8 to 10% higher than what we're selling in the residential area. So it's not a huge drop. It is a drop, and it's just slower, but it does sell at the end of the day.
Thank you, Councilmember Lee. Councilmember Ostergaard, Flynn, do you have thoughts and comments?
I mean, I'll defer to all my fellow members who are in the real estate sector, but I find it fascinating. But and also I know that Wendell, you just mentioned about construction. I would really like to listen more to your thoughts about the construction for when we get to that point as well. Thanks.
Councilmember Lee, do you want to say anything about it for the fiscal year, or defer to discussion on subsequent years?
Oh, I'll defer. Yeah.
Okay. Well, sounds like we've had a pretty good discussion. Anyone want to propose any number at this point?
So Gert, just, you might want to officially move on to the revenue or the agenda item where you
Okay,
are
okay.
discussing things.
Okay, so we have kind of already moved practically
Yeah.
discussion of the current year's general fund discussion. So we're talking about the current year's general fund discussion for fiscal year 2024. Anyone want to propose a number?
I
I
propose
found-
whatever number Christie wants.
Yeah, go ahead.
No, I wanted to go on the record as expressing my caution about this fiscal year. The forecast that we had, and I say we, that I had from our models before the last meeting, I think was 3.5. It went up just a little bit when I reran it last week, but I'm mostly worried about April and this conversation about housing. I was just looking at just for Oahu, the decline in unit counts, actual transactions on Oahu, was a little bit smaller in 2023 for single family, but it was bigger for condos. You aggregate them up, it was about the same. But the other thing that's different is that home values were lower. Single family home values were, I don't know the percentage, but they were probably in the low single digit lower. And so combined, those two together, right, can have a significant impact on estimated taxes, payments with returns coming from the realtors, right, and anybody else who's working in that industry that's sort of not a payroll job, right, but rather as a independent contractor or self-employed or whatever. And so, I mean, I think the U.S. stock market obviously has some potential to offset that in capital gains, but like I said, I worry about April. And having said all that, I guess I would be inclined to leave our forecast unchanged for the current fiscal year. I certainly wouldn't raise it like the model consensus suggests.
So are you proposing 4, Dr. Bonham?
I am.
Okay. Any second on the 4%?
I'll second that.
Okay. Any further discussion on the current fiscal year?
I would just say that I agree with Carl that April is a real unknown, and we went from always being under $1 billion to all of a sudden 2 years of over $1 billion for whatever reason. And I mean, if we go back to 1, I mean, that's a big number, and that we could have a large miss on. So we'll find out, I guess, by our May meeting if
In a month
April
or
came
two.
through, but by then people have already been using our numbers and stuff. So that is my big concern.
Any other further discussion or comments? Okay, we'll take a vote on fiscal year 2024. The motion that's been seconded is at 4% for the current fiscal year. Vice Chair Maynard, Dr. Bonham,
Aye.
Councilmember Hayashi.
Aye.
Councilmember Lee,
Aye.
Councilmember Ostergaard Clem,
Aye.
and Councilmember Hamasu.
Aye.
Okay. The vote carries unanimously at 4% for the current fiscal year forecast, 2024. The next item on the agenda is next fiscal year's forecast for fiscal year 2025. Anyone want to start us off? I think at the last meeting, Councilmember Hamasu, you had some thoughts about perhaps the dropping in the interest rates and how it might be more robust in fiscal year 2025.
Yeah, I still feel fairly confident that, I mean, after hearing all the heroes and the D-beds and all their forecasts as to what's going to happen to our economy, I anticipate that Chairman Powell will be true to his word and start cutting rates, but it sounds like instead of mid-year, it'll probably be towards the end of the year now, based on what appears to be happening in terms of delays, in terms of what's happening, what's happening on the mainland. So I anticipate positive, I mean, stronger growth towards the end of the year, and so fiscal year 2025, I'm more optimistic, and I think you had 4 and it went up to what, 4.5 or something in
Yeah.
fiscal year 2025.
Is it Dr. Kobe, is it 4.5 or 4.8?
Well, I'm sorry, what's for your forecast for 2025?
Yeah, 2025.
4.8.
4.75.
4.7.
Okay,
Round it up.
I feel fairly confident that's probably a little more conservative than my thought. If it's open to a wide vote, I'd say probably in excess of 5.25, 5.5, maybe, but that's just maybe me being in real estate, being more optimistic than I should be. But I think as soon as interest rates drop, we're going to see. We have a lot of people that I'm aware of that are investors that are sitting on the sidelines waiting for optimistic leading indicators to show that 2025 would be a better year. So I don't know. I think it's in line with thought that it's going to be an improvement for 2025, but I'm open to hearing everybody else's thoughts on that.
Well, I'll just jump in if you don't mind. I think lower interest rates absolutely will help a lot of things as far as, especially the real estate market. People who are sitting on the fence and don't really want this huge house, but downsizing actually costs more because interest rates would be higher. So I think it will unleash some volume and activity. Whether or not we're going to be rates are going to come down as much as people hope, or as soon as people hope, that's always a big question, and nobody knows, but we can guess. I guess my main concern are just the rather anemic growth in GE taxes at 1.5 so far year to date. That's the largest source of income, and then the TAT. And as Seth had said, well, we kind of anticipated it would be lower because visitors are down, but that continues on with, I think January numbers were down too, and people are spending less. They're here fewer days, and
room rates are down too, right? Quite sure. Room rates.
That's Maui.
Mhm.
I mean, Maui has, average room rate of $600+ a night,
yeah.
and we took a big hit on Maui visitors. So when you get to January of next year, the year-over-year comparison is going to drive growth rates. And that's true for excise tax as well.
Yeah, so I was looking at January year over year. And maybe, I think you're right, Carl, there's still some effects, but I think year over year, we're still down just for the month of
Well,
January.
we should be, right?
Yeah.
Right. I
But
mean, we're still feeling
talking
the
about
effects.
next year, right? We're not talking about this year.
What I'm saying is that January of next year,
Yeah.
right, the next fiscal year, because we've already done the 2024 fiscal
Right.
year. So next fiscal year, January will look good compared to this January.
I think the biggest question mark with the TAT is how the state approaches short-term rentals. Right? So there's if they make decisions to regulate and really downsize the amount of short-term rentals that are available, then that could affect TAT.
But that's not going to be something that will happen in the next fiscal year. I mean, it's possible.
Yeah, I don't know.
Wouldn't that be positive though? That means hotel room rates would actually escalate because there is this fewer supply of available units to rent, then, right?
But the units to rent also pay TAT. Yeah. I'm
So-
just saying, those are concerns of mine because and I think you're right, Carl. I think we'll see continued rebound in Maui.
Carl, wasn't there a big drop in the room rates in Maui as well as?
Only very temporary, very temporary. I'm almost positive. I'll double check it while we're talking, but I'm
from like
almost
1,000
positive
to
that
100 or something?
room rates on Maui have recovered
Yeah.
to what they were. You give me 1 second. Maui County hotel average daily rate is $560. So yeah, it's still, so that was the January rate was at $560. It was $612 in December. No, so you are right. They remain $60, $70 below where they were, 10% below where they were. But and then the room rates are they're all messed up because of a whole bunch of the rooms on Maui are still being leased to at government rates.
Mhm.
So the hotels are basically full, but a whole bunch of them are not full, but they're almost as full as they were, but a whole bunch of them are being rented out at well below the old market rate.
And the government pays TAT too, right?
Oh, sure. Yeah.
Yeah.
But
But at a lower
the
rate.
rate that whatever the per diem rate is, it's,
Mm-hmm.
350, 400, whatever it is, it's a lot less than 600.
Mhm.
So if Christy, you have more?
No.
Okay, I'll follow. So I guess our take on interest rates is that we'll probably see a mortgage rate at about 6 near the end of the year, give or take 10 or 20 basis points, which is like a one-day swing in today's bond market.
Yeah.
And I think the Fed will probably lower rates 3 times this year, just like they said they would.
Mhm.
So whether that's May or when that starts happening, so that sort of continues to be our view that rates are, and I don't think that the 6% on a mortgage is going to free up an enormous amount of inventory. I think we're going to be working through this sort of lock-in effect for a number of years to come.
Mhm.
And I mean, no one said anything about the continued job growth that is continuing to propel the U.S. economy forward, or for that matter, how strong GDP was. Or I mean, we're beginning to see a little bit of weakness in retail sales and consumer spending, and I guess part of our view on the interest rate story is that the inflation numbers that we've seen in the last few reports are just sort of a bumpy road towards that Fed target. And if you look at the 6-month movement in the Fed's preferred indicators, you could argue the Fed's already at target, and I think they're going to get a lot more comfortable in coming months. So you should never be confident about interest rate forecasts, but I think there's a really good chance that those rates are going to go down. The narrative for the U.S. is really one of a soft landing now, which is kind of scary because most of the economists are all in agreement. So something's going to go wrong. But I would say that I still think the risks are to the downside. So I think that we have a soft landing scenario, but the problem is that the labor market always looks good until it doesn't, and it can turn over very, very quickly. So I'm a little bit concerned there, but I'm saying all that, we're working on our next forecast already, and we're going to be raising our US GDP forecast once again.
Mhm.
You know, we often talk about things and sound pessimistic, but the forecast is for over 2% growth. And, you know, our forecast for Hawaii for calendar 2024 is, I think, 1.5% growth, and then accelerating in calendar 2025. Because right now, the numbers that I've seen on the Maui cleanup, on the debris removal, suggest that the people who are doing planning think they're going to be done with debris removal by first quarter 2025. And that suggests to me that we're going to likely start seeing some infrastructure rebuilding by the end of 2024, and then accelerating as we go through 2025. And so that building activity that sort of piles on top of all the other stuff that's happening, particularly at Pearl Harbor and across the state, to me is what brings some more optimism for we're going to see higher growth rates in 25, 26, 27. As long as Jay Powell doesn't blow it.
Mhm.
Councilmember Ostergaard, Glenn?
So thanks, Carl. That's the kind of thing that I mentioned before about the building, like for me to listen to you guys talk about the real estate and the existing inventory and stuff like that. But that's really what I was interested in hearing more about, was this, what is this new building going to be for 25 and then onwards? Because it just seems, I mean, is that too short a time frame to say 25, or is it, you feel pretty comfortable about that? Yeah.
Well, so I think you will see significant activity in 2025, specifically on Maui, and you know the vast majority of that will be infrastructure, but there will also be housing, and you know some of it we probably won't benefit as much in terms of building activity as you might, because I think we're going to see more modular housing come in. Right? There were a couple of announcements last week about state and FEMA projects for modular housing, and I think we're going to see more. So it's not the same as if you built everything from scratch, but it gets us housing. And you know we think that in the next 2 years, really, 2 years, we probably could see another 2,000 to 3,000 housing units added on Maui, which is, you know, we need to do that, and the vast majority of that money is federal dollars, some insurance dollars, some private dollars, and some state dollars, and that piles on top of what was already expected to be. I mean, if you look at my fiscal year forecasts for construction activities, they're rough. I'm guessing. I know they're double digits. They're 15% growth probably the next several years.
And that's not constrained about the number of construction workers, actually?
Oh, well, sure. Yeah, but that's part of it, is that in
yeah.
dollar terms,
Mhm.
the costs are likely to go up because of constraints on construction workers. And you know, there's still concerns about supply constraints, and I've actually been hearing some stories about the effects of the Panama Canal on getting building materials to Hawaii.
Yeah, there
So
should
one
be
thing that no
problems.
one's mentioned is CPI is going up again, right? I mean, inflation in Hawaii in the certainly in the last quarter of the year was, I want to say, up in the mid to high 3% range. So it actually turned around pretty sharply, and most of that it was showing up in the shelter component, just like it did nationally. So that also will contribute to some higher excise tax collections in the first half of the next fiscal year, assuming it persists.
Hey, Seth, what percentage of the total revenues are based on construction?
Good question. So I don't really have an answer to that. I do know that for our models, they're the third most important after TPI and visitor arrivals. But I don't.
And
I
that's
can't really
probably,
say.
I think that has more to do with the sort of the, so it's not so much the direct
Yeah.
revenue effect, right? So if you looked at the total contracting tax base in 2022, it would have been 10 billion, right? And excise tax was what, annual
Four.
year 2020. Oh, I'm looking at the base. Yeah, so the base excise tax base was like 140 billion, and the contracting tax base was like 10 billion. But the spillover effects of contracting is where you get most of the
Yeah. I've also
most of the
thought about
economic
that.
impact.
The indirect impact is much greater from contracting.
Yeah.
And Regina, I was going to add, so, to your point about labor, shortage of labor, but that's why I think, to Carl's point about modular housing, using modular housing, in theory, it's quicker to construct. So the labor need is less to construct the same amount of units for modular housing than it would be for traditional building. So I think that's one of the things that, to increase the number of housing, that's why they're looking at the modular.
Yeah, makes sense. Totally makes sense.
Councilmember Lee, we had deferred your comments.
No, on the housing side, I don't really have a good, I know construction's going to increase, but I just don't have a good handle on, I think what Carl and everybody else is saying makes more sense to me than what I have, but so I'll pass on that discussion.
Anyone want to propose a number for fiscal year 2025? Okay, Dr. Bono?
I'll propose whatever Christie wants.
Oh, man.
No, I'll propose that we stick with our current forecast.
Really fine.
Yeah, I would agree with that. There's so many unknowns, always, of course.
Because
But,
what was the model came out with 8.5?
Yeah, that's a big number, yeah.
Yeah, that was
No, so our current forecast is 4.8
right.
or
Compared to what,
4.75.
yeah, but compared to what the most recent, our member, the Model 1 came out at 8.5, yeah?
Yeah, it's a lot higher.
Yeah,
I don't believe that.
you're kind of like,
So that's Model 1. That's Model 1, right?
yes.
Let's see.
Yeah, that's Model 1.
Mhm.
Where
Which
that's,
seems to be generating particularly high numbers.
the mean
'cause it was high.
forecast for Model 3 was 4.5. If I'm reading this right.
Well, what page are you on?
Page 9 of the workbook has all three models, or the two
Okay,
models,
thank
Model
you.
1 and Model 3, and then the average of Model 1 and 3.
Yeah, it's 4.5 for Model 3 in fiscal year 2025. So I heard a proposal for 4.8.
I'll second that.
You said-
Can I just be clear? Is that 4.8 or 4.75 like previously?
A rounding error.
I'll go with 4.8
Yeah,
4.8.
out of
Okay.
an abundance of optimism.
Yeah.
0.05 up more.
I'm okay with that too.
Any more discussion on fiscal year 2025? Okay, we'll take a vote then. The proposal for fiscal year 2025 is 4.8% growth rate. Vice Chair Maynard, Dr. Bonham?
Aye.
Councilmember Hayashi,
Aye.
Councilmember Lee,
Aye.
Councilmember Ostergaard Lim,
I
Councilmember Hamasu.
Aye.
So the vote at 4.8% carries unanimously. So the council has proposed 4.8 4.5% growth rate for fiscal year 2025. Okay, next item is the final 5 years of the forecast from fiscal year 2026 to 2030. Anyone want to start us off? Dr. Bonham?
I'm perfectly happy with our existing forecast.
Now it looks like we're not doing any work, Carl. Leave everything the same.
We
Spent a
increased,
lot of time
increased
on
Well,
it.
you know,
25 by
things
0.5.
Point to,
I'm not sure things have changed all that much.
yeah,
Yeah,
Yeah. I'm just, counting on getting through this fiscal year and not having a huge April surprise in the
Yeah.
wrong direction.
that's my big fear.
And Carl, you mentioned that you were anticipating healthy growth, at least all the way through 2027.
Yeah.
So you think, forecast would stick at 4.5% going forward?
Honestly, that's that 4.5% number. So is that where we are? Oh,
Well-
you're asking if we should carry 4.5% forward?
Yeah, I mean, 2026 has 4.5%, and then it slowly decreases to 3.5 by 2020.
Right.
So what is our
You know-
long run
Yeah.
growth rate?
Something between 3.5 and 4.
Yeah,
You know?
3.5.
I mean, my average growth rate over that period and from my model is 3.87. And yeah, I mean, we know we're going to get several years of stronger growth out of the Maui rebuilding and the other construction activity. Of course, that's assuming that the US and the global economies don't go into recessions. And so maybe we would expect the numbers to be a little bit higher. I don't know. There's a heck of a lot of uncertainty, right? We got an election coming up, and who knows who's going to win that or who's going to concede when the time comes. And the further out you go, I mean, 3.5 to 4, it's all the same number when you get out 3 or 4 years from now in terms of uncertainty.
stick
Any
to our gun,
further?
3.5 or.
Councilmember Lee, did you have any thoughts?
Yeah, I think our previous projection was 3.5, or is it?
It's 4.5 for
It's-
fiscal year 26, 4% for 27 fiscal year, and 3.5.
Okay, yeah,
last year.
4.5, yeah. So I think that sounds good.
Carl, just curious with regard to the Japanese visitors, I know they haven't come back yet. Is there any thought as far as when we might see them to start coming back? Because right now, my understanding is, we're almost back to pre-pandemic levels, but the difference has been domestic visitors have kind of filled the gap that the Japanese market has dropped off on. But with the Japanese yen being so weak, it seems like they're staying away. And I guess the question is, maybe Christy, maybe it's a financial markets question, but do we have any thoughts on when that might start to reverse?
I would say that, this year is a little bit better than last year.
No, it's a lot better. I mean, we're at. Sorry, I didn't mean to interrupt. Go ahead.
Yeah, just interrupt me, but I can quickly share.
Good.
So, share my screen, so just so you can see.
Can you share screen? Do you? Okay.
You see, so the light green here, these are the daily numbers that it's wonderful that they have. I love having these. The light green is pre-pandemic. And the pink is last year, and the dark color is this year. So we are doing better than last year. but the yen continues to be very weak. And even when they come, the number, we think of the Japanese travelers as those who spend a lot of money, but right now our West Coast visitors are giving them a run for the money. So that's just Japan in general. This difference between the same numbers in international, the reason why we're down is because of the Japanese market. But to your other point, yeah, as far as domestic count, we're up, and total passengers, we're kind of right on top of, could be worse sort of things. So, and it's quite volatile too, so you can see.
So
some-
one caveat for Christie's data is that those are passengers. Those are not
Yeah.
visitors, right?
That's
So
true.
the visitors are passengers, but not all passengers are visitors.
That's
and
true.
Since, probably everyone on this call except me has been to Japan 3 times in the last,
Yeah.
year, a whole bunch of them are getting counted in the passenger count data.
That's true.
and
Absolutely true.
As of so I actually haven't, it'll be interesting to see whether we got any kind of bump out of the Honolulu Festival. The bump out of the marathon was quite a bit smaller than I
We
think we
hoped.
would have liked. It was much better than the year before. But
Mhm.
at the end of last year, we were, in terms of visitor arrivals, we were roughly 50% of pre-pandemic levels. And so on a quarterly basis, that was roughly 190,000 Japanese visitors in the fourth quarter of last year, compared with 400,000 in the fourth quarter of 2019. Our forecast for the fourth quarter of 2025 is roughly 270,000. So we think we're going to continue to see incremental gains, but our forecast was never for complete recovery, unlike some of my colleagues who have expected that the Japanese would. I mean, we don't have complete recovery in the Japanese market anywhere in our forecast horizon. And what Christy was talking about, the dollar spending, the Japanese per person per day spending is basically flat in dollars, but in yen it's up 30%. So
Yeah.
they're spending, their spending in yen has gone up approximately the same as the U.S. visitor spending has gone up percentage wise in dollars. So this is a pretty weak thing to hang your hat on, but maybe when the Fed starts cutting rates, and maybe when Japan normalizes its monetary policy further, and the yen starts to strengthen a little bit, they'll spend those yen in dollars, right?
Mhm.
So if we can get them to hold if their yen spending stays a little bit elevated as the currency improves, look, if we can just get them back, that'll be a big improvement. And really, you could see a 10 or 20% move in the yen without too much of a challenge. Really, when let's say the Fed cuts interest rates 75 to 100 basis points over the entire next year, and if we could get a nice wage increase in this year's negotiations in Japan, and their inflation numbers don't come down too much, it wouldn't surprise me to see a 15 to 20% move in the yen. That's not that much, I mean, in the scheme of things. Actually, we saw that in the tail end of last year, and then it reversed itself. So
Still 135 as opposed to 110.
So right now,
as
it's,
opposed to 150.
yeah, it was
It's
150. We're
150
down
right
to
now.
147 right now.
Yeah.
So it's,
I think it was down 15% when it's
Yeah.
maybe
Mhm.
130, but for many years it was closer to 110.
Yeah.
Any further thoughts on the out years?
So I know
So
Carl, go ahead. I was just going to ask Carl to follow up a little bit on, I know you mentioned about CPI going up, and what maybe your thoughts are on if we want to look at personal income and wages over the next couple years, and then that, conflict with CPI. I mean, is there any thoughts that you have in how that might change within the next 2 fiscal years?
So basically, the way we think about the local CPI is, I mean, we're tied to the US. So we're going to end up with the same, ultimately, long term, we're going to end up with the same inflation as the nation. And so to us, that means on the CPI, 2.25%. So, I know if everybody thinks the Fed's target is 2%, but it's not 2% for the CPI, it's 2% for the PCE. And so that's really closer to 2.5 on the CPI. So take that as sort of where you think we're headed. In the short run, right, we're going to see variation of that because of our economy, because maybe home prices or rents are changing differently here. But going out, when I think about the end of our forecast cycle, I think 2.5% on the CPI. Wage growth and income growth in real terms, we think it's heading towards a number like 1%. And so still outpacing inflation, but the real numbers, and actually, if you look at the last decade of say real GDP growth, it's in that ballpark, something like 1%. And so that's where I come up with a 3.5% number for sort of steady state tax revenue growth. If tax revenues were growing, and actually they normally grow a little bit faster than overall income, but if you just use the sort of total potential output or total potential income, you get the 1% real plus 1.5, 2.5 inflation, you get to 3.5.
So Carl, how do you factor in the loss of population? Because that, of course, is not good.
I mean, if you go out further out you go, the slower those job numbers and have to, your labor force growth goes, approaches zero, and your job growth has to slow down commensurate with that. Over the next 2 or 3 years, I don't know that you can sustain this over 5 years, but over the next 2 or 3, even with no population growth, you can see labor force growth, and you can see job growth because of multiple job holdings, and because the labor force participation rate is still below where it was pre-pandemic. That's not that's by no means a guarantee, because not only so labor force participation rate's about 1 percentage point below where it was pre-pandemic. That's about 15,000 people.
Yeah.
But the population is also 4 to 5 years older than they were in the pandemic, and so you expect that you don't expect the labor force participation rate to come roaring back. But there is certainly room for the labor force to grow by 10 or 15,000 people over the next few years, and as plus multiple job holdings to sustain job growth, maybe around 1%. So a lot slower than it has been, and heading well below that, right? The further out you go, you've got to have population. Sorry, you've got to have job growth sort of trending well below 1%. And then we also have our population forecast sort of turning the corner out in 2025, 2026, because we know nationally the immigration picture is adding tremendously to population and to the labor force. I mean, a lot of the job growth that we've been seeing over the last 6 months to a year has been foreign born. Doesn't necessarily mean it's new immigrants, but and we think that we will see some renewed in-migration to Hawaii, particularly international, that will help to offset some of the out-migration of Hawaii residents to the continent. And eventually people will actually start having children again.
Are you forecasting that too, Carl?
I should say the birth rate should stop falling.
Yeah.
But that's we've been saying that for a while, and
Yeah.
everybody was really surprised by how much birth rates fell. And then what Maui is kind of a wild card, right? I mean, we are certain we've seen outflow of population, and if we build the housing fast enough, maybe we won't see much more, right? Maybe we sort of saw the initial outflow of people with fewer family ties and right, sort of temporary workers and things like that. But if we don't get the housing built, then that's a real concern.
Mhm. Yeah, I'm just trying to think of what would turn around the out-migration.
Well, so I mean, right now, what happened during the pandemic was the international flows just I mean, they basically went away.
Mhm.
And if you go back, 2015, 16, 17, even while you had net out migration to the continent, you had international net in migration that was helping to offset that. And it went away really back in 2018, 2019, and then got worse during the pandemic.
Sure.
So, I think there's reason to think that could be improved. And, maybe we'll get lucky and the politicians will actually come up with a comprehensive, migration policy and worker visa program and all the things that we need to have happen. Cross your fingers.
So it sounds like leaving things as they are is not a bad strategy.
I don't know. I was just wondering if right now it's at 4.5. Is that right? So, which is a little lower than 4.8 for 2025. But I mean, all these kind of things I'm just hearing is 4.5 even too high? I don't.
Mhm.
I don't know.
I guess my thinking is that's still largely rebuild period, right? I mean, you're going to get a ramp up of building, but it's going to take multiple years. And
Yeah. So that's
Yeah.
enough. That's gonna kind of hold over against all these other pessimistic things that we're talking about. It's enough to kind of buoy it up.
that's my story. I'm sticking to it.
Oh.
Councilmember Hamasu, did you want to comment on our current forecast and what's the discussion?
Yeah, I think what Carl mentioned makes sense. I am in agreement with probably staying at the 4.5%, only because, while there are economic issues that are going to be challenging us in 2026, Maui rebuilding, lower interest rates, I think a rebuilding of the Japanese tourists. I think construction activity will continue to remain strong. In terms of personal wealth, personal income, I think stock market should be, probably even healthier than it is now. So all of those things, I'm thinking 4.5 probably makes sense to me. I haven't heard anything really that would distract or detract from keeping it as is, other than maybe a little bit slightly more negative going forward. But yeah, I'm willing to stay at 4.5.
Thank you. Was there a proposal at this point? Carl, did you say keep?
I made a proposal to keep the forecast unchanged from our last, the whole shooting match.
And
I'll
Christine-
second that.
okay,
Okay,
second
let
it.
someone else second. Yeah, thank you.
Any further discussion? Okay, so the proposal that's been seconded is to keep our forecasts the same from fiscal year 2026 to 2030. So it starts at 4.5% for fiscal 26, 4% for fiscal 27, then 3.5% growth rate for the last three fiscal years, 28 to 30. Vice Chair Meaner,
Aye.
Dr. Bonham,
Aye.
Councilmember Hayashi,
Aye.
Councilmember Lee,
I,
Councilmember Astagad Clem, Councilmember Hamasu.
Aye.
Okay. So the vote carries unanimously. We're going to keep our forecasts the same for the last 5 fiscal years. Okay, the next item on the agenda, is it the BNF, the report? It's a
Good
report by
afternoon.
yes.
Good afternoon, Chair and council
Um,
members. My name is Donovan Chun, and I'm with the Department of Budget and Finance.
Yes.
Before I get into our report, which we have provided to you, at the end of the January meeting, general fund meeting, Chair asked a question regarding, his question was, do we have an idea of how much money has come in from the federal government to help with the Maui wildfire?
Yes.
And I did forward a link on the state's website. And I forwarded a document, and what it reflected was a $2 billion infusion of federal funds to various state departments. I did want to point out that those are awards given directly to departments, but it does not include all the federal funds that are coming into the state to address the wildfire. There are a lot of funds coming into the state that are actually federal entities coming in and spending money here without it going through the state departments or agencies. I do not have the total dollar amount. I understand that there is an Office of Recovery that is trying to capture all those funds and will include not only the awards, grants given to departments, but will also try to capture all of the federal entities that are spending money to address the wildfire issues, such as EPA and such, you know. But I don't believe that site is up yet. As soon as I have some information, I could forward it to you, so you could take a look at that.
Yeah, we'd appreciate that. Thank you, Mr. Chun.
Okay,
And
so
if I could just comment, money can be awarded, but not necessarily spent, correct?
Yes.
true. Okay, so I guess I should discuss that a little before I get on a report. So a lot of the federal funds, the federal government will award you a grant, but there are requirements to actually get those funds. You have to have expenditures, they have to qualify. There are certain guidelines and rules that you got to comply with. And so although you may have for example, say you may have a $5 million award, when you actually start trying to collect that funds, you got to provide all the documentation to the federal agencies who are reviewing it. So there may be, I believe that came up in the news recently, where there were certain people that were disqualified from being helped. So although there's $5 million and it'll go out there, there are certain limitations as to what you will actually recover and the amount that you'll get reimbursed. The funds that are spent by the federal government, of course, they're spending it themselves.
Right.
Yeah, so it's a little bit different. Okay, so moving on
Thank
from
you.
that, so we did provide you a report of our revised projections of general fund non-tax revenues, non-general fund tax, and non-tax revenues since the January 8th meeting. And those revenue estimates were prepared by departments in January and February, and then were based on that point in time assumptions made by the program and the department staff. We have included a highlight of some of the, well, there was a summary of the significant changes attached to our report. I did want to point out something, and it kind of goes along with what I had told you just a minute ago. A second. Okay. In our report on page 5A, this is reflecting other than special funds revenues, and so you will notice under federal funds there's a huge change.
Mm.
And what we've tried to do is, we work with departments. There's thousands of data points in our report, in our system that we collect. And we've been trying to have the numbers be more reflective of what the departments will actually receive. There's so many different programs and people working on this, but we always try to encourage them to look at your history and look at your projections. And although you may have, $100 million award, try and look at the historical as far as what you will actually receive, because, we don't want the numbers overly inflated. Now, of course, this is federal funds, so a lot of times they want to show the whole award. But again, it just depends on what is allowable under the federal programs as far as what you can receive, what reimbursements you will actually get. And so I just wanted to point that out because it is a large change, but that's the process we go through, that, especially when we have a lot of turnover in staff. But we always try to encourage them to be more realistic as far as their projections and the reality of what will actually come in over the course of time. But that was the main thing, and it kind of tied into what we had talked about, the wildfire recovery funds coming in. There's a large commitment, but again, at the end, it's what is accepted by the federal government and what is recovered. And that was the only thing I kind of wanted to point out.
Hmm.
Any questions?
It's quite a big difference between.
Yeah, and it is many data points, so it's it does end up being a very large number. But of course, we also do receive a lot of federal awards, so there's a lot of data points in there that get changed.
So you're noticing, I noticed that $2 billion difference, so that's as accurate as you can get that number to, roughly, in terms of understanding that?
Well, yeah, at this point, it's something that it's an ongoing working process because there's so many different awards that we're looking at. But yes, they, especially say like Department of Human Services will have many federal awards in various programs. And a lot of them are very different as far as how they calculate what they project to receive. There's a federal award, but again, your award might not truly be reflective of what you actually collect. So in our case, we're just trying to be more realistic. Optimistically, yeah, you want to be able to draw all those funds, but that's not necessarily the case at the end of the day. Yeah.
Is it what we failed to collect as well? That we failed to draw down properly? Because I know when I was on the COVID committee on drawing down, it just seems like we had a hard time spending it, or not maybe spending it, but utilizing it in a manner to meet the deadlines. And I suspect a lot of monies that were available were not properly received.
That does play a role in it. And that's why we try to encourage them to be more accurate as far as projecting out what they actually receive. A lot of times, especially like say Department of Human Services, it depends too on if your clientele comes in and they request certain services.
Right.
That's all projections, and that's why we kind of try to look at, ideally draw everything down, but you still have to look at what's the historical. If your staffing is short, then you can't process as many people, then you cannot claim for as many clients. So there's all these different factors, and every program is very different. But it does end up being, yes, a large variance. And that's why we kind of try to work with them to try to be a little bit more accurate and realistic in the projections. But that's similar to the wildfire, right? We see all these funds and we're like, yeah, that's going to be great. But at the end of the day, you still have to be able to document and be able to get the approval of the federal government. And what timeline on is that going to come in? That's another question too. Yes,
Yeah, I know that's another problem, getting approval. It's like sometimes they want you to spend it first, get a reimbursement, and then you fail to get the reimbursement and you're wondering where the money got spent already. So it's a tough position. I think our government officials are put into, that the monies are there to spend it. And then if you don't spend it properly, then, it gets recognized for a poor expenditure. And so people get a little concerned, get a little bit more conservative, which is a good thing, but then we leave funds on the table, and that can be frustrating.
I'll give you an example of some of the other difficulties. Is the timing. Recently last year, we still received the money from the earthquake at Kiholo Bay. That's 2006.
Yep.
And it's over a decade later, and we're still collecting recovery funds from that. But it's just a long, drawn out process.
Yeah, it is. It's very difficult.
So are there initiatives or programs to try to capture the money that we might be leaving on the table quicker and more effectively?
They're all trying to do that, but like I said, there's times where you have short staff, or even on the federal side, you might have short staff, or you might have changeover of staff, and then they sometimes have different requirements, or they look at things differently.
You almost need
there's a lot of factors
to track all of this stuff, because they're doing it really not as a full-time job, but as part of their duties, whereas you really need full-time people looking at this to ensure that we're efficiently collecting what's due to us. It's very difficult.
Any other
So I
questions?
think Donovan's just trying to make the council forecasting look good.
I have no control over that.
Thank
Sorry.
you, Donovan.
Any other questions of Mr. Chan?
And one question about, I saw in the notes regarding the charges for current services was due to harbors. What was that all
Yes.
about?
Okay, hang on a second. Was it under, do you know what page you were looking at?
Well, it's table 5A, but the next page after that, under charges for current services, you said the net decrease was due to projected harbor operations revenue, or lower than projected harbor operations.
Okay, hang on a second. Oh, I think that was under special fund non-tax revenues. Probably was on table 4A. Yeah, so harbors they have wharfage fees and such. So they have a projection of how much is going to be, how much incoming will travel over their harbors facility, and the projected charges on those. I will need to double check exactly what changed as far as that transfer. Hang on a second. Let me see if I have what changed.
It just showed like a $250 million difference. I just was wondering.
Hang on. Their actual change for harbors was 18 million reduction. That number that you looked at is accumulated accumulation of various departments and agencies' charges. The actual wharfage reduction was they had less than they had projected as far as wharfage. And then they had some wharfage waivers. I am not sure exactly what the waivers for. They did not describe it further. And I'm not sure if it was due to things coming in for Maui or not. But that's sometimes normally what they would do if they're going to give somebody a waiver as far as things coming across the pier. Sorry?
It also mentioned UH Hilo and UH revolving accounts of the Research Corporation.
Yes, so they have transferred some of their funds from the Research Corp into a special fund under UH Manoa. I think there was a statute that required them to do that.
They're basically forcing researchers to quit using RCUH and move their funds to accounts in the Office of Research Services, which is the university as a whole. They're basically figuring out ways to make our lives harder.
Thanks to you for your insight.
Or my rant.
Any other questions of Mr. Chan? Okay, thank you, Mr. Chan.
Thank you.
Any motion to adopt the report of BNF?
So moved.
Second,
Okay, so the vote is to approve the report of Budget and Finance. Vice Chair Maynard, Dr. Bonham,
Aye.
Councilmember Hayashi,
Aye.
Councilmember Lee,
aye,
Councilmember Ostergaard Clem,
Aye.
Councilmember Hamasu.
Aye.
So the report by BNF is approved unanimously. The final item on the agenda is going to be scheduling the next general fund meeting, which will be in May. Dr. Kobe, is the next reporting day, is it June 1st?
Correct.
So anyone have any thoughts about when they would like to schedule the next meeting in May? I guess Memorial Day is Monday, the 25th, right?
27, maybe?
Or I'm sorry, the 27th, yeah, 27th, I'm looking at the wrong month. So
We could do it on the 28th.
yeah, historically, we've either done it like the Tuesday after that, or we've done it even the week before sometimes.
it is fine for me.
I know the 28th, I'm gonna be on a flight in the afternoon. But if everyone else wants to do it on that day, then I don't know.
Does a Wednesday, is that too late? If we-
No, we could do it.
Or is it, I'm sorry, is it easier to do it the Wednesday or Thursday or Friday before? I mean, although that's a
Yeah,
Memorial Day weekend.
we have done it at times before. I think in fact, last year we did it like the preceding Monday or Tuesday, if I remember.
The
I may
29th
be
works for me.
traveling the week before,
The entire week? Dr.
the
Cook?
20th to the 24th. I may be traveling.
Okay,
I am traveling.
okay. How's
So
the,
how about the
I'll be back on the
29th?
27th.
29th,
Is the 29th?
Yeah.
yeah, 29th, would that be okay?
yep,
Okay,
2
Dr. Cook,
p.m.
Mhm.
is it 2 o'clock on the 29th? Is that gonna be enough time for you guys?
Yes.
Okay. Okay, so is everyone okay with the 29th at 2 p.m. Hawaii time?
Yeah.
Okay, so the next meeting will be on Wednesday, May 29th at 2 p.m. Hawaii time. And then I guess we're gonna end the meeting, but I did want to have someone talk about, for the new, particularly for the new members, as a reminder for the existing members, that we have our disclosure report that's going to be due, as well as ethics training requirements. So I think, Dr. Kobe, we're going to conclude the meeting, the public part of the meeting. Yes.
Correct. So we're asking everybody, all the audience members to sign off. And if not, we're going to kick you off. So one way or the other. And then Nathan Chi from the AGs is going to address your concerns about ethics training.
Okay. And then we also have a financial disclosure, right? That's due end of May, I think.
The
Cool.
May. Mhm.
End of May. Yeah, so all of us have to turn in each year a financial disclosure form by the end of May. And actually, once you log in, it kind of populates.
Very easy.
It's very easy. Yeah.
Yes.
Are we still recording?
I don't think